Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. It's been a while since my last video. I was on vacation for the past week, so there have been quite a few developments on the broad markets that we're going to cover today. Many hints and small price actions that actually are beginning to confirm my bearish outlook on the S&P 500. If you've been following me for a while, you'll know that my longer term outlook on the S&P 500, when I review the weekly and monthly chart on other videos, I do have a bias towards the short case. And obviously that differs on the daily chart, differs on the hourly chart, but on the longer term, I do see more downside for the U.S. stock market. Now, I'm gonna obviously cover all that in this video. If you are new, make sure to like and subscribe if you have not already, and let's get right into it. So, again, in my last video, I talked about the S&P 500 making a false breakout. In my last S&P 500 video, I talked about this being a false breakout. We had all-time highs here at give or take at the 3,000 level in the futures, and we broke that, and we had many signs telling us that this was not a real breakout. And if you bought this breakout, well, look where we're at now. We're actually below the all-time highs, the previous all-time highs. And now I said this because first of all, this was not an impulsive breakout whatsoever. When you see a breakout, you want to see a big green candle crushing the level, which we did not see. And obviously, um, you know, these are all things that I mentioned in my videos again and again, but we had the divergence on the MACD, divergence on the RSI on the daily and on the weekly. On the hourly time frames, we had divergence. These are all signs that momentum is slowing in the markets, and having a breakout on slowing momentum is just absolutely ridiculous. And look where it got us. We had three big red days here and coming back under the 3,000 level. So right now anything could happen. That's pretty much what I'm going to be talking about in this video. Is there more downside to come in the days coming, or are we just going to bounce back off of this level and continue wedging higher? And these are two real potential options. I mean, this could really just be a backtest of the 3,000 level, and then we'll continue on higher like this. A backtest doesn't always have to be perfect. This would just be a small overshoot of the 3,000 level. We're right now at 293. So that would just be a small overshoot of the all-time highs, and we could potentially still reverse and go on higher. So that's one option. And if we do this, that would definitely validate this trend line. This is a new trend line that I haven't put on yet, so you guys are probably wondering what is this coming to do on my chart. Well, this trend line for now has two reactions, and if we start reversing here, we could potentially have a third reaction on this trend line, and that would give us a new wedge that we could continue on higher before breaking it later in the year. So that's my first scenario. That's the more bullish scenario that I have, that we reverse, that this is just a backtest of the all-time highs, and that we reverse higher, extended divergence, and maybe in a couple weeks or a month we'll have the stock market crash, the stock market correction that I'm looking for, seeing the weekly and monthly divergence. Now, if you're wondering what I'm talking about when I say weekly, monthly divergence, I do have many longer term outlook videos. I'm not going to cover those charts today. I'm definitely going to make more videos like that in the future, but go check out my videos if you don't know what I'm talking about. So that's, again, that's my first scenario. My second scenario, and that's the one I prefer, uh, is that we probably will have some type of a bounce here, to trap some longs. All the people who think this is just a small back test of the all-time highs, when they see a green day, they'll start buying in, trap some longs, and then we'll have a nice break of that level. And if we do start going lower, you'll see that the selling will get more and more impulsive, and you'll start to see big red candles like this, and that's when you can jump from one level to the next within a day. A huge candle like this is definitely possible after a small rebound and then a break of the level. Um, we'll get to these to my three targets in absolutely no time. So that's my second potential scenarios, and for that, considering this is actually my preferred scenario, I'm going to give you guys a level to watch on the daily chart. This level, this is what I am watching personally. Um, right right where we stopped on Friday, the low on Friday is what I'm watching, and that's what typically happens on the stock market. Once you get a low and people expect a small rebound, when you start undercutting that level again, and some people aren't expecting prices to go below that level, when they do eventually go down that level and the selling starts getting more and more impulsive, that's when you have these big red candles, and that's when the selling can go very quick. So when we start to undercut this 290 level, the 2,900 level, you're gonna see more impulsive selling, and that's when we're gonna visit this first target here in absolutely no time. So those are my two main scenarios: either a big bounce and a wedge higher. That would be the boring scenario. I don't. It's not the scenario I favor. I don't think it's probable. I think um, the time for a correction has come, but I could be wrong, and we could wedge higher. And obviously, this is my second scenario, um, where we visit my targets that I've been talking about for a while. Now, one more thing to watch on the chart, on the daily chart, is the MACD, which is currently above the zero line. And if you guys have been following me, you'll know that I love to watch the zero line of the MACD. It tells me if the price is in an uptrend or a downtrend. And you can see as long as it remains above the zero line, we are clearly in an uptrend. And that is the case right now. We are clearly in an uptrend. We are clearly above the zero line. So for now, I am not going short too aggressively, although I have taken a small position off the break of the 3,000 level. I have taken a short position, but not too aggressive, considering we are still in an uptrend. However, you'll notice that the MACD is actually pointing down. So considering the MACD is a simple momentum indicator, if it's pointing down, well, the momentum is down. So we could really break the zero line any day, and that would break the trend and bring us again down to our next few targets. So that's pretty much all I wanted to say for today. I hope you guys enjoyed the video. If you did, make sure to like and subscribe. In the meantime, good luck on your trading, and see you next time.